Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone and welcome to another edition of our weekly podcast. Global equities trended mixed amid continued US trade policy uncertainty. After falling into correction territory, US equities rallied on Friday as a potential government shutdown was likely averted. Despite this, major US equity indices recorded a weekly decline of 2.3 to 3% on comments from US policymakers about a likely near-term weakness in the US economy and weak domestic growth indicators. Asian equities trended weak, dragged by Singapore, which fell about 4%, Taiwan and Indonesia falling about 3%, while China A-shares continued to rally, up 2%, as investors overlooked sharper than expected deflationary pressures amid policy optimism. Other Asian markets like Philippines and Korea rallied 1%, while China offshore equity benchmark closed flat. Back home, the Nifty index fell 1% for the week, reversing some of the gains made last week amid increased policy uncertainty on global trade front and foreign investor outflows. Broader markets underperformed Nifty this week, with the Nifty Mid-Cap Index down 2%, while the Nifty Small-Cap Index was down 2.3% for the week. Among sectors, utilities was the only sector to end in green with a gain of 0.8%, while realty, auto and IT led the losers with cuts of over 2%. The Indian fixed income market had a volatile week, with the Indian government bond yield curve flattening this week as short maturity yields rose higher than long maturity, driven by rising US bond yields and uncertainty from global trade policies. However, lower than expected consumer price inflation during the week and the RBI's OMO purchase of INR 500 billion worth of bond supported the longer maturity yields. The 10-year Indian government bond yield rose 2 basis points to 6.7%, while the 3-year and 5-year bond yields changed 5 basis points and 0 basis points respectively. Brent crude oil prices rebounded on Friday, up 1% to end the week nearly unchanged at $70.6 per barrel, as investors weighed the diminishing prospects of a quick end to the Ukraine war that could bring back more Russian energy supplies to Western markets. The INR fell 0.1% against the US dollar to close at 87 per dollar amid rising US bond yields and continued foreign investor outflows from domestic equities. Coming to macro updates for the week, the first was on India's consumer price inflation, which rose 3.62% in February of 2025, down from a revised 4.3% recorded in the previous month and below market expectations of a 4% rise. This marked the slowest rise in consumer prices since July of the previous year and the first time in 6 months that inflation fell below the RBI's 4% medium-term target. The decline was driven primarily by a sharp fall in food article prices, which fell at 3.75% compared to 5.97% recorded in the previous month, driven by deflationary pressures for eggs, spices, vegetables, and pulses. Also, prices fell for fuel and light and remained soft for housing. On a monthly basis, though, consumer prices fell about 0.47%, extending the revised 1% drop in January, the fourth consecutive period of deflation. Second update was on India's industrial production, which grew 5% year-on-year in January of 2025, following a revised 3.5% growth recorded in December and exceeding market expectations of a 3.5% growth. This was driven by stronger output in several sectors, including coke and refined petroleum products, other non-metallic mineral products. Additionally, production rebounded in food products and motor vehicles, trailers and semi-trailers. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.